In GameStop's entire history, they've never been more popular than they are today. And the reason behind it, as we know, is unprecedented. Now, I can't stand the word unprecedented because I feel like it's used way too often for things that are not truly unprecedented. But in this case, the way that GameStop has been reacting in the market is unprecedented. The stock has been on a true roller coaster if you've been following it for the past month, and it's not one that I want to be on. However, if you are invested and you're continuing to ride this thing, I really wish you the best. Who knows what it's going to be next week, the week after? How long can this thing possibly last? My name is Sam, and today we're going to be talking about the overall insanity of GameStop and the market as a whole, because we've seen so much volatility this week. When I'm going over the market as a whole, I'll be taking a look at the 1970s and how this could possibly be teaching us a lesson that we could learn from today as to why the market has moved so suddenly this week. A lot of info today, but if you are new to the channel, definitely consider subscribing and leave a comment down below. I'd love to hear your thoughts. The overall market this week has been up and down. Just this past Wednesday, the Dow hit an all-time high of 32,000. Then on Thursday, it dipped down to $31,400, a loss of 560 points or 1.75%. I never understood why they always refer to the loss or the gain in the Dow as points, because I always look at the percentage. I feel like the percentage is way more important. This is how I look at everything, so I keep everything kind of weighted. The points, yes, they're important, but the percentage is what I really pay attention to. Anyway, the Dow was up Wednesday to 32,000, and this came after the FDA had mentioned approval of a vaccine by Johnson & Johnson. Then on Thursday, the market was crushed, and today, Friday, the market's down again. And the reason behind this is inflation, and the idea of inflation hurting the market is very real. There is a proposal of a $1.9 trillion stimulus package to be pumped into the economy, bringing in tons of new money. It's now, some of you might think this sounds great, some of you might think this sounds terrible. Ultimately, what's going to happen is when that money hits the economy, it's going to make all of the other dollars that you already own be worth less. They're going to have less buying power. Yes, they're still going to be worth $1 here, $1 there, but that dollar won't go as far. Now, what this is called when your money isn't worth nearly as much as it was before is inflation. There's also continued talks of a $15 minimum wage, and that originally was going to be in the stimulus package, but it looks like it's not. So Thursday, we thought that the $15 minimum wage was going to be part of the stimulus package, causing the market to go way down. And then Friday, we find out that it's probably not going to be part of the package, so it's not down as much. And yes, again, the $15 minimum wage is going to put more money in people's pockets. However, it's just going to hurt the dollars that are already in people's pockets. So that's going to be the inflation. More dollars out there, but less buying power. When we have higher levels of inflation, bonds tend to look more attractive and stocks look less attractive. This especially hits tech stocks like Google, Amazon, Facebook, all of those high-tech companies. Looking back at the 1970s, we can see why investors would be so weary of potential high inflation numbers, as we see that the market really took a dive back throughout that entire decade. As you can see here, the market was around 6,600 in the early 1970s and fell to $2,238 by 1982. This was a loss of around 66%. Now, during the same time in the 1970s, the bond market exploded. 10-year bonds started off around $6.68 and increased to $14.73, an increase of around 121%. This is not something we have seen since. In fact, 10-year bonds just last year only returned 0.198%. This isn't even anywhere near keeping up with the rate of inflation, so people haven't been investing in them. But if inflation increases here soon, we could see something like the Nixon administration saw, where bonds were skyrocketing and the market was tanking. This is what's causing a lot of the worry in the market. All right, so off that tangent and back to GameStop. When I was growing up, I used to go to GameStop just to play games. It was kind of crazy. I know, a crazy concept. I like going to the mall just because they had a display there of the PS2 where you could play a motocross game featuring Ricky Carmichael, and you could also play NBA Street. You could stand there as long as you want, play as much as you want, play against your friends. It was a free arcade, and I made sure to take advantage of it. Now, 2021 has brought a ton of interest back into GameStop for very different reasons. There is a huge buzz around it because of the stock and Reddit. I really thought that the buzz around the stock was going to stop. I mean, last month we saw GameStop go from $20 all the way up to about $350 and then came tumbling back down. So I thought for sure people were going to just abandon this. So when it came crashing down, it got all the way down to $40. However, this week we've seen it go over $100 again. What in the world is going on here? On Wednesday, we saw it rise more than 100% in one day. If you are new to investing, like you've just become interested in it in the past year or so, you need to realize that behavior like this with this type of stock is not normal at all. So Jim Cramer had interesting thoughts on why GameStop could be increasing so much on Wednesday. And his thought was, he said that the only way that this could be possible is say that GameStop takes itself and becomes like an introduction to cryptocurrency. So you could go in there, play games, and you could win cryptocurrency. And the crypto is going to be bought by GameStop selling their own stock. So say they sell $1 billion worth of stock, they purchase crypto with it, then you can go into the stores, you can play the games, and you can win cryptocurrency with that. It's not necessarily Bitcoin or anything like that, but it could be a different form of crypto. As you know, there's plenty of it out there. Now, of course, this is all hypothetical. He doesn't exactly know what's going on here, but this is an interesting thought, and it would make sense, I guess, if GameStop did take advantage of this and did something like this. How legal would it be? I don't know. Is this gambling? I don't know. How would it be regulated? We don't know. However, if we did know, I bet GameStop stock would go even higher. I think that the vast majority of us are just continuing to sit back, watch this ride out, and just scratch our heads and say, wow. At some point it has to be over, right? I mean, we can't just continue to see this stock inflate and deflate and inflate and deflate. It's like a balloon. If you keep doing that, eventually it's going to pop. Personally, I do not own GameStop stock, in case you haven't realized by now. I actually own very few individual stocks. What I do have invested in individual stocks is just for fun. It's just an amount of money that I don't mind losing. It's not something that I'm planning for my retirement on. That is just a little too volatile for me. I think it's fun to trade individual stocks. I do have a small portfolio of just money that I'm willing to lose. Over the past 5 years, I'm up 200%, which is great. But it's not something that I'm really banking on. It's just very, very risky. If you are the type that really loves investing in individual stocks and you're planning on your retirement with this, you may want to reconsider and look into something more diversified. It can be very easy to get caught up in these crazy stories of individuals that have made hundreds of thousands of dollars over the short period of time, over like a 2-week period. However, you don't hear the stories of individuals that have put their life savings into individual stocks and then lost everything. That doesn't make very good news. Unfortunately, the stories of people losing all of their money are way more common. It's just not something that you want to hear. So think about this for a moment. The Fortune 500 is a list of the 500 largest companies in the United States. Since 2000, just 21 years ago, over 52% of the companies that were on the Fortune 500 list no longer exist. Just 21 years ago, they were one of the largest companies in the United States, and now they are extinct. It's not like you can't just trade these anymore. The companies no longer exist. Examples of this are airlines Pan Am and Eastern, bookstore Borders, Blockbuster Video, the Kodak Film Company, brokerage firm Payne Weber, and Enron. The list of these companies is very long, and they should provide a warning for anybody that's thinking about investing solely in individual stocks. I assure you, there were a ton of people at the time investing in all of these stocks thinking these companies aren't going anywhere. I'm going to be making my money back on these. I'm going to be making huge returns. And you probably were for year over year. And then something like Enron happens and the whole thing shuts down. You lose everything. If you are investing in individual stocks or you're just getting started, just realize it might be a good idea to only invest an amount of money that you are willing to lose. Just consider it gone the moment that you invest it. If you do see a return on it, fantastic. That's awesome. You're going to end up paying capital gains tax on that, which isn't too crazy right now. However, just realize the money could vanish overnight. It does not seem to be a very good idea for investing in individual stocks and trying to beat the market. Personally, I like to purchase mutual funds and ETFs, which is going to fulfill my full retirement needs. You got to realize that there are full-time investors out there that do this for a living with huge clients, and the vast majority of them are unable to beat the market. To think that you're going to be able to beat the market yourself by investing in stocks that you really have a good feeling for it's very unlikely. I hope that you enjoyed this video. I hope that you found it insightful and learned something and start thinking about things in a different way. If you did, definitely like the video, leave a comment, subscribe to the channel. I'd love to hear your thoughts. And also, anytime that you're investing, make sure that you do your own homework. Don't listen to anybody else. You've got to do your own research. These are the kind of things that are going to either set you up in the future or really hurt you. Never be too quick to buy, never be too quick to sell. Just always look at all of your angles, what your ultimate goals are, and where you want your retirement to go. Everyone's investment ideas are going to be different. So mine aren't going to be the same as yours aren't going to be the same as mine. They're always going to be different because you have a different background than I do. You were raised by a different household than I was or your friend was. So it's just always going to be different. You're going to be reading different articles. You're going to be interested in different companies. So you're not going to be involved in all of the different markets, all the different technologies that are out there. So it's best just to engross yourself in as much as you possibly can, learn the different markets, learn why things are moving up and down, and not just get caught up in, oh, this company sounds good because they said that they're going to have a great quarter. That doesn't mean that in the long run they're going to be doing well. Maybe you can make a few quick bucks, but what's the ultimate goal here? Are you trying to make money over a short couple week period? And if you are, that's fine. That's kind of gamifying it. It's just trading a few stocks here and there with money that you're willing to lose, and that's fine. However, for your overall retirement goals, you need to think about long term and understanding what the overall market's going to be doing, not just how's GameStop going to be doing over the next couple days. Until next time, thanks for watching.